Welcome to this week's Tech Thoughts. It's our first episode after the summer break, and it's Friday the 13th. Inge, how is the market, and do you think that we will have a Friday the 13th opening today, which is probably not so good?
I hope not. No, I think the market in general has been really volatile this summer. And not if you look at the index, but if you look at the shares below, it's been really volatile. And I would say in conclusion, it's been really selling the shares that's been strong and the shares that has a COVID play. So it's really a reopening play, because what you have seen is you have seen a number of companies having, so it's a year-over-year comparison problems, as we expected, with engagement and so on. And that's not surprising, given that we had a complete lockdown last year. But the surprise comes in the volatility, the fact that these shares has been weak going into the numbers and been extremely weak after the numbers and still trade weak. So we're a little bit surprised that the market is hammering in these type of stocks so hard, given the fact it's quite well known what's been going on.
So to summarize this, the summer, we have split it up in 4 segments. So gaming, software, summarise, and digital platforms, which are the main areas that we cover. And it's kind of diverse. So if we start with gaming, they have had a pretty rough summer, right?
It's been really rough for engagement numbers coming down with gaming, and that's been hitting the stocks hard. It's really well-known fact. So we're a little bit surprised that the sentiment has turned so sour towards the gaming stocks. But then it's been a little bit of a mixed effect in gaming. The guys with or the companies with good product portfolios has delivered quite good Q2 numbers. Companies which have a little bit of a tough comparison with COVID, but also with product portfolio, had a little bit tough time. And then you have had some mobile gaming companies that have been struggling a little bit especially in June and July, with the EDFA changes on iOS. So the Google side of the business are much better than the Apple side, but it's also not huge effects, but share price effects has been very large. And what's been going on then is that these mobile gaming companies has been changing their ad networks. They have adjusted their portfolios, and it takes 1-2 quarters, and then it's up and running again. So we're surprised that you have seen the volatility that we've seen, because if you have a good game, you have a good game. And then if you're struggling a little bit short term with your numbers due to the fact that you had this EDFA change, it really doesn't change the fundamentals of the companies.
No, to summarize gaming, then we have maybe a trinity there of bad news during the summer and pre-summer there. Tough COVID comps, that people now are going out more. We have Apple changing privacy mode, EDFA, as you said. And third, also mentioning China, which maybe is more of an investor worry of the political risk more than actual doings in China. So talking to our people in China there, this has been pretty known, and Tencent has altered their gaming system for the last 5 years to hinder people under 18s to spend money and spend too much time. But talking to them, they're not so worried. But in media, when Chinese state media calls gaming opium, is of course something that the stock markets think is a bit scary. Moving over to semis and software, Inge, what do we see there?
We start with a simple side of it. It's software. It's really delivered a strong Q2. We've even seen acceleration in the demand for software. So to summarize it in one word or one sentence, I would say a really strong Q2 for software in general. So that's been the clear positives in the quarter. If we move out to semis, numbers has been fantastic. The guidance for second half is really strong. The ones that have been outstating something about 2022, like KLA, very, very strong indications. And this is very much in line with our view when we look at the number of factories that are being built and the capacity needed to be added. So that's been really, really good. But coming to the stocks, they have been under pressure the last few weeks. And the reason has been that people have been really worried about inventory levels and the memory side. We had a broker yesterday coming out with a quite negative call on memory for the short run, and Morgan Stanley, and Micron was hit quite hard about regarding it. And it's a quite easy call, stating that the PC market has peaked, it's going to slow down, and so on. And that's absolutely right. Then the question comes, how much will it slow down? Because if you look at the memory side, the data center side is much more important, and it's growing quite rapidly. So will a slowdown in the PC side really move the needle or not? Question mark. But when it comes to the equipment names, which we like, we are not worried at all. So we're doing completely opposite the market. So we're buying more in the dips, and it looks really strong. And we're really looking forward to the ASML Capital Markets Day here in September, when we think they will raise guidance in general for the market and themselves for the next few years.
So you really want to be on the supply side and not on the demand side. So companies like, of course, Apple is the big player there, buying a lot of semis, but other hardware companies will run into problems this fall. And we also see car manufacturers continue to stop their production for a while just because they don't get equipment or semiconductors. Great. And finally, digital platforms. We have seen some pretty scary reactions from reports of Etsy, Pinterest, and also the Amazon report was quite weak.
Yeah, and we're back to the engagement numbers, and I think it's a double whammy a little bit this year also. Firstly, you have the COVID comparison with last year, but also we have had an extreme warm summer. So people are really looking forward to do something else than sit in front of a computer. At the same time, we have had really warm weather, which has been dragging people out of their houses. So I think we have seen two really negatives towards the quarter, and that will settle down during the second half of this year. And the underlying growth still looks really healthy. We could see tough comparisons for 1, maybe 2 more quarters, and then we will see the underlying growth coming back again. So we are not worried at all against this segment. We think it's a growing segment, and it's really interesting. So in many cases, this creates, I would say, buying opportunities.
Interesting. And any final things that we should look for the coming week or weeks?
We talked about gaming, and you will have the US numbers coming out tonight from MPD, which will be quite interesting. And then we still are in reporting season. So one of the most interesting companies I think that will report will be Roblox and Applied Materials on the semi side. Both of them will watch very carefully, and especially Roblox, given the fact that if you look at their guidance, they are really guiding for a massive slowdown. And I just wonder how the market will take that, because if they really show the numbers they've guided for, I just wonder how the stock will react on that.
Great. Looking forward to all those news. And I think that was it for today, and see you next week.
Thank you very much.